What is up, crypto peeps? Welcome to another episode of the Crypto Red Wedding. I'm joined by an esteemed guest today who's an astute financial analyst and will provide us with his verdict on the market. Please say hi to Crypto Ren. Ren, can you share with us your analysis and let us know how you got to this verdict? I'd say that's an accurate depiction of what's going on. All right, back to CoinMarketCap. You could see that Bitcoin is currently trading at 9,500, Ethereum's at around 720, Ripple's below 90 cents, Litecoin's below 180, Neo's below 100. But the interesting figure, or the important figure to notice here, is the market cap and the Bitcoin dominance percentage. So the Bitcoin dominance percentage has remained practically the same over the last few weeks at around 42%, but the market cap is dwindling. Obviously, we're currently below 400 billion at 385 billion. And the reason that that is important in relation to Bitcoin dominance is if Bitcoin dominance remains the same, but the market cap is dwindling, that means that the entire array of coins, or the entire set of coins, all of the cryptocurrencies, are falling at the same rate and are following Bitcoin's lead. So that obviously is an indication that Bitcoin still controls the market. We already knew that, but it is, you know, it's good to confirm it with actual data. If we take a look at the historical market cap numbers, you could see that we haven't been this low since February 6th, around the time of that major crash that we had in 2018. And before that, you have to go as far back as December 4th in order to reach comparable market cap levels. Now, before I get into the Bitcoin charts, I wanted to discuss why this is actually happening. And this can't be explained merely with charts, right? So there's obviously technical analysis and fundamental analysis that goes along with it. And within fundamental analysis, you have, you know, the news, the valuation of the actual security, et cetera, et cetera. So the major piece of news that came down, at least as it relates to the US, is this right here. Bitcoin price tumbles below 10K as SEC says crypto exchanges must register with agency. Obviously, the SEC is a US-based agency, and this affects mostly the US volume with regards to crypto trading. And this is actually confirmed by, if you look at the volume numbers, right? Here's the Bitcoin volume by currency. You could see that the number one currency the number one currency that Bitcoin is traded against is actually the Japanese yen. USD is second. And if you look at the volume, Japanese yen, it's still really healthy at 331,900, around 332,000 Bitcoin in the last 24 hours. And USD is almost half that. So, and if you look at the percentage of the market share, the Japanese yen controls almost half of the world Bitcoin market, and in USD, currently it only sits at about a quarter. And here's the Bitcoin to Japanese yen pairing, and this graph shows the total volume of Bitcoin traded, and you can see that we're routinely over 200 and 300,000. Now, in the US, which you could see that it, you know, as we said, it constitutes a quarter of the entire worldwide Bitcoin market. So anything that happens in the US, or Japan for that matter, is going to rock the crypto world. Here's the same data for the US. So this is BTC against USD for 6 months. And you could see how low the volume is. I mean, look at the volume in the beginning of March. Like, we're dipping below 100,000. We're just in the tens of thousands of Bitcoin. And if you look at this article here, it says Bitcoin trading volume plunges to a 2-year low. And this article is from a couple days ago. We have recovered a bit since then. We have recovered a bit since then in terms of the volume, but still, this is minuscule compared to, you know, where we were before, and certainly compared to what Japan is currently pushing. So any kind of news or regulation talk that affects the US market is going to affect the worldwide Bitcoin market. And this right here, the SEC saying that crypto exchanges have to register with the agency, this just caused the market to plummet. And that's why I was saying that you have to take a look at fundamental analysis as well as technical analysis, because on the chart, if you go back to what we had a few days ago, that inverse head and shoulders was formed. It looked like we were trending upwards. There really wasn't any indication based on from a technical analysis perspective that we were going to see a bullish or bearish reversal, right? There was nothing on the chart that indicated that. You couldn't tell that. As a matter of fact, even the RSI if the RSI drops back down to the oversold level, that would be the first time in years that the RSI has actually hit the oversold level and has not gone up to the overbought level thereafter. And again, we're looking at the one-day chart for Bitcoin. So here's why charting is still really important in conjunction with fundamental analysis, right? Like, you'll hear naysayers of charting or technical analysis say, oh yeah, see, that's why technical analysis doesn't work. Well, if you're trading, technical analysis and using indicators and knowing how to chart will actually help you get in and out of trades and allow you to set an exit strategy. So while people may dismiss this and say that, oh, you know, I just trade based off of feel or what's going on in the news or how I feel about a certain blockchain project, how do you set your entry and exit points? How do you know when to get out? You need to have a guide, right? And even if you don't believe in technical analysis as a way of assessing the value of a cryptocurrency or the value of a security, it still gives you a guide as to when, based on historical pricing, when is a good time to exit and maybe buy back. So if I'm taking a look at this, right, Bitcoin is currently bouncing off of this 0.382 fib ratio, which is around $9,100. Now, if it dips below that, then you can set the next fib ratio as a target. It doesn't mean that it's for sure going to hit it, or it doesn't mean that if it does hit it, it will stop there. But you need to have a guide and a plan, right? And stick to that plan. So if it goes below this 0.382 fib ratio, you might want, depending on where you bought, obviously, if you want to stop the bleeding, you might sell your Bitcoin and buy back at a cheaper price. Or if you already sold, you might target, you know, a price point between the 0.236 fib level and the 0.382 fib level as a buyback zone, and maybe buy back, scale your buybacks, maybe buy back, you know, like 25% of your Bitcoin budget and see how the market reacts then. So this right here is a guide for you to exit in and out of trades. You don't have to believe wholeheartedly in technical analysis and say, you know, I can just look at the charts and tell where the price is going. Obviously, that's not true. The chart is not going to tell you that what the SEC decided or the statements that the SEC made. But it is still a fundamental aspect of trading responsibly, in my opinion, and being able to set good entry and exit strategies. Now, another reason why the market is declining is because of these low volumes. Large transactions will affect the market really easily. And you could see here, and you probably heard of this already, but yesterday there was a Bitcoin whale, who had revealed that he or she had sold about $400 million worth of Bitcoin and Bitcoin Cash in the last few months. Now, if we're trading at all-time low volume, or maybe not all-time low, but 2-year low volumes, that obviously is going to rock the crypto world. Now, there was speculation, there was some thought that this person had conducted this one big transaction at one time, but no, it was actually something that he or she had been doing since September 2017. But still, the important thing to note here is that about 1,000 people hold 40% of the world's Bitcoin. It's a known fact that Bitcoin has a very bad Gini coefficient. And Gini coefficient is basically a coefficient that's used in economic markets or financial markets to determine the spread of wealth of a certain, either a certain currency or a certain security. In this case, Bitcoin has a very bad Gini coefficient because a very small percentage of people own a large percentage of the market share. So again, any major transactions can rock the crypto world, and especially when it's coupled with bad news, for instance, that regulations coming down the pike for at least for U.S. traders, then, you know, that coupled with the large transactions is going to send the market plummeting. Now, there's always been speculation as to whether the market is deliberately being manipulated by these whales that hold large amounts of Bitcoin. Because Bitcoin is not regulated, there's nothing that is really preventing them from getting on the phone with each other. And a lot of these whales know each other, right? We're only talking about 1,000 people. There's no doubt that a few of them know each other. So there's nothing that's stopping them from getting on the phone together and saying, hey, look, I'm about to sell, you know, X amount of Bitcoin, so I don't want it to affect you, or let's do it together, or, you know, let's make sure that we look out for one another, and let's sell at this price point because we just see it plummeting from here. There's really nothing stopping them from doing that. And there's no stopping pump and dumps. There's no stopping insider trading because it's not a security. Here's an interesting statement by Gary Ross, who's a securities lawyer. He said, because Bitcoin is a digital currency and not a security, there's no prohibition against a trade in which a group agrees to buy enough to push the price up and then cashes out in minutes. Even the infamous Roger Ver said that there definitely could be truth to these claims of market manipulation. He said, I suspect that it is likely true and people should be able to do whatever they want with their own money. I've personally never had time for things like that though. So while regulation is frowned upon by most of the crypto community, at least the crypto enthusiasts who have been in it for a long enough time, because it's not in the spirit of crypto, right? Like crypto is supposed to be a decentralized environment where people are able to transact without the interference of governments and banks. And while I appreciate that spirit and I'm all for that, and that's actually one of the reasons that got me into cryptocurrency, we can't also complain if there is market manipulation, right? Like a lot of people who are trading in cryptocurrency, they all scream market manipulation and complain about the market being manipulated by these whales, these Bitcoin whales. So yeah, while I frown upon regulation in general, at least as it relates to trading and transacting in cryptocurrency, I guess it's really hard to counter against market manipulation by Bitcoin whales because the Gini coefficient of Bitcoin is so terrible. Now, I'll conclude with this. Obviously, we're talking about Bitcoin because Bitcoin drives the market, right? Bitcoin is the market driver. You saw the Bitcoin dominance numbers from earlier. Hopefully, we'll get to a point where we have a thriving cryptocurrency market that doesn't depend on this one cryptocurrency. And once we get there, then market manipulation, surely, I mean, market manipulation is even a thing in equity markets, even though it's illegal. So people are more cautious when they do it. But it's a thing in equity markets, and hopefully we can grow the crypto community, the cryptocurrency market large enough to where we are not affected by one cryptocurrency. And where even if there is market manipulation on Bitcoin, for instance, because Bitcoin has a terrible Gini coefficient, other coins such as Litecoin and Ethereum and Ripple and Cardano and Stellar Lumens, where those cryptocurrencies are spread out a little more equally and aren't owned by, you know, a few thousand people around the world. All right, on to the Bitcoin chart. No, not that one. All right, here is the actual Bitcoin chart that we took a look at earlier. Again, as I said, the RSI, if we drop back down to an oversold level, that'll be the first time in years that we've hit an oversold level and haven't gone up to an overbought level thereafter. I don't know if that will happen because, again, this isn't based solely on the charts, right? There is the SEC news. We don't know what's really going to happen with that. The volumes are at all-time lows. We need those volumes to kick back in, and we need, especially from the U.S., because as you saw in the Japanese market, the volume looks normal compared to what it's been in the last few weeks. So again, using the fib levels as our support and resistance targets, if Bitcoin breaks below this 9,100 fib level, then we can use the next fib level as a support target for Bitcoin, which is at around 8,300. You should train yourselves to buy in the dip because that's really the best way, to make money and to protect yourself against major crashes. Because I bought a bunch of Bitcoin, say at 5,900. I mean, I own Bitcoin from, you know, a bunch of cheap Bitcoin from last year, but let's just talk about this year. Say you bought a bunch of Bitcoin at the dip at 5,900 or even at 6,500, for instance. You can sustain these crashes with ease because Bitcoin currently is at, you know, around 9,200. So if you bought Bitcoin at 6,500 or 7,000 even, you're good. You can sustain these crashes. But if you bought Bitcoin at 12,000 because of FOMO, really, then you are probably in a bad spot right now. If you draw the downtrend resistance line and you draw the uptrend support line, you'll see that we broke both trend lines and we're currently in this indecision pattern here. Again, we're on the day chart, so we'll have to see how this plays out. Maybe we'll trade sideways in some sort of consolidation for a few days. Maybe we'll continue to dip below if we break below this 0.382 level. but it's yet to be seen. I would currently wait on the sidelines to see how Bitcoin reacts and then make my trading decisions from there. All right, that's the market update for today. Thanks for sticking around. Hopefully I provided some clarity by going over some of the historical volume numbers, as well as discussing what effect Bitcoin whales can have in the market through their large transactions. If you're not already subscribed to the channel, go ahead and do that. Hit that notification bell. Leave a thumbs up if you got anything out of this video. Leave a comment if you like. If you need to hit me up, join the Discord. It's free. I'm always there. Join the Patreon for the trade alerts and the weekly report. We'll do it live. Fuck it. Do it live. I'll write it and we'll do it live. We'll probably be doing a live show this Saturday, so look out for an alert for that. I'll confirm it in the next video probably, but I usually announce it in the Discord as well as on Twitter. Oh yeah, follow me on Twitter as well. I haven't been active on social media at all, so I'll leave my Twitter in the description as well. Stay safe out there. Peace.